Welcome back to Overtime. Blue chips and small caps both rallying today. The Dow setting a record close and the Russell 2000 climbing 2%. Meantime, crypto saw a nice bounce as well, with Bitcoin climbing nearly 6%. Let's bring in Fundstrat Head of Research, Tom Lee. Tom, always good to see you. So we're going to start with the big picture, including politics. Fortunately, former President Trump was not significantly injured in this assassination attempt over the weekend, but just talking about the impact on investments as well of this overall environment. If President Trump were to win, you say it would be positive for Bitcoin and for cyclicals and commercial REITs, but I'm curious, why negative energy and healthcare?
Thank you, John. I think the reason it's negative for energy is somewhat counterintuitive, but President Trump is favorable for drilling, and he'd want to expand where we look for oil, but that would put downside pressure on oil prices. So that's why we think it would actually ultimately be negative for energy stocks. And for healthcare, I think it has a lot to do with, potentially repealing Obamacare, but also just the fact that pharmaceutical companies and their pricing, I think, would come under a lot more scrutiny as well.
Okay. Now, I got to ask about your small cap call. I think you said a few months ago that small caps could rise 50%. We saw at the end of last week some interesting rotation into small caps. How much further in 24 can they run?
I think the rally that started last week for small caps is going to be larger than the October to December rally of last year. That was over 8 weeks, almost a 30% gain for the Russell 2000. This time we have a larger short position by institutions. We have small caps even more oversold, and valuations, whether you look at median PE, which is now at 10 times 2025 earnings, even lower. So we think that this move could be something like 10 weeks and as much as 40%. So I think it is just starting, and a lot of it has to do with the fact that, the June CPI was so astonishingly soft. I think it's giving the green light for small caps to rally finally, because the Fed will ultimately cut, hopefully by September.
And how much do you expect the S&P to potentially rise over that same 10 weeks?
That's a good question. I think July, our base case remains that July should be good for the S&P 500. So, something like 57, maybe even close to 5,800 in July. But I think that August is really going to be one where the rotation becomes more evident, and I think it's going to be a stronger small cap and maybe flat to slightly down for the S&P.
Okay, and so that's what I was getting at is how strong can the small cap, say the Russell 2000 as a proxy, be versus the S&P 500? And you're saying after July, you actually think that there's going to be a significant outperformance of small caps versus that index?
Yes, and that's kind of what happened in that October to December rally. That, as you know, the large caps actually really sputtered in late December and early January because of that rotation into small caps. And I think, again, because the positioning is even more short relative to large caps, that it could be an even more sizable move.
How much of that move is dependent on the Fed cutting in September?
John, it is important. One of the reasons small caps rallied as much as they did last week is that the probability of a September cut went from 70% to 94%. So I think it's important for inflation to kind of continue to track pretty soft. I mean, we'll get some inflation reports, but I think the possibility of a July cut is there as well, because we get retail sales tomorrow. And if that's soft and we get other soft indicators of weak labor or inflation, it could be a July cut as well.
Okay, and how much of the durability of that small cap rally has to do with either the Fed indicating that it's open to continuing cutting and the overall environment not suggesting that they have to because the consumer has gotten so weak that that's a necessity?
Either way, John, I mean, the reason the consumer is weak, and we already know parts of the economy are pretty weak, it's durable spending, like used cars are falling like a rock, and housing is kind of grinding to a halt. And we know there's an inventory correction. These are three sectors of the economy that are super rate sensitive. So a Fed cut really does turn those things around. But I think most importantly, regional banks have been rallying. Mark Newton, our technician, says they've actually broken out. Financials are 40% of the Russell 2000. So I think you've already got a lot more support for a pretty big Russell move from here.
Tom, I love that you give us some specific picks and predictions, and you've been right for quite a streak. Tom Lee from Fundstrat, thanks for joining us. Still ahead, Google is reportedly